Well, federal student loan payments are set to resume on October 1st after a 3-year pause. Parents and students have so many questions regarding current loans and what they can expect from federal financial aid in the future. Well, joining us now as part of our Student Loan Week is Justin Drager, the National Association of Student Financial Aid Administrators President and CEO. Good to have you on. I'm sure it's a very busy week for you, especially at the moment. So first of all, for students who are seeing this start to kick in, they're looking down the road at October, what should be in their loan repayment toolkit when they're trying to manage this debt?
Yeah, the first thing we would advise any student or family that's managing student loan debt is not to wait. The time to be thinking about repaying your student loan debt is today, not waiting until the last moment. So reaching out, contacting your federal student loan servicer, logging into your account and thinking about making payment arrangements now. As was just explained in the previous segment, there are payment options available to students and families that are struggling, including deferments, forbearances, and income-driven repayment plans, including a new one by the Department of Education called the SAVE Plan that will save students and families a significant amount of money if their income is not in a place where they can make payments.
And obviously, this can be very overwhelming when you're trying to figure out which plans you qualify for. How should people approach this? I mean, you have the HEROES Act, you have Biden's SAVE Plan, wondering whether or not you qualify. How do you sort of work your way through it to put yourself in the best position for your particular loan?
Yeah, you really nailed it. It's unfortunately, fortunately, there are lots of benefits with federal student loans. Unfortunately, because it is a federal loan program, there's lots of bureaucracy and complexity around it. And it can be difficult to navigate all of the different options and benefits that are available. The good news is that on studentaid.gov, if borrowers log into their accounts, they can use a federal loan calculator to determine exactly which repayment plan will most benefit them. They can try to contact their federal student loan servicer. And because, as you pointed out, federal student loans are being onboarded for 20 million borrowers after a 3.5-year pause. Wait times are expected to be significant. Federal student aid is giving borrowers a significant time to on-ramp. So if they're not able to get through, they do have a significant amount of time to try to get through and get their payments figured out. They can also reach out to their college or university's financial aid office. They may have left school, but those financial aid offices are there to try to help students figure out their repayment options even after they've left.
And some people might not know, but your organization, the member institutions, serve 9 out of every 10 undergraduate students in the United States. So at some point, your organization, connects with these students here. So if you're a financial aid administrator, how are you sort of training and getting used to some of these changes and some of the questions that are coming at some of these administrators?
Right. It's a very complex environment. It gets more complex every single year, but financial aid offices have to be compliant and administratively capable to participate in all of these programs. So if you're attending an institution, which most do in the United States, if you're an accredited institution that's offering federal Pell Grants or federal student loans or federal work study, you have signed up and made an agreement with the United States government that you are going to stay up to date on all federal regulations and be compliant, and that you are going to help your students and borrowers navigate these complex systems even after they've left. And in fact, schools are held accountable for how many borrowers end up defaulting on their student loans. So schools have a vested interest, not just altruistically, but a financial interest in helping students navigate their loans successfully and repay them successfully.
And then specifically looking at FAFSA, how do those changes impact the financial aid administrators?
Yeah, financial aid administrators are helping students navigate some really complex changes that'll begin in the 24-25 year, which is a year from now. We just started up the 23-24 year, but the new FAFSA is due out this next December. So if you're a parent of a high school senior right now, and you're thinking about filling out the free application for federal student aid, that FAFSA will be coming out this December. And there will be some changes this year to federal methodology, which means how we are calculating financial need and how financial aid offices then are applying those calculations to determine whether families qualify for federal Pell Grants, work study, and the types of loans that they'll qualify for. Really, to qualify for financial aid, And when we say financial aid, we mean all of it: grants, scholarships, work, and loans. Financial aid offices need two things. They need to know how much it's going to cost a family to go to college, and then they need to know how much financial need there is. And it all starts with the FAFSA. So families should be looking for that form to be available in the month of December, according to the U.S. Department of Education.
And Justin, just lastly, I want to ask you, obviously, some borrowers in default or perhaps planning to go into default if they just don't think they can make the payments. What role is your organization playing in administrating the Fresh Start program to really help borrowers and help them manage or get out of some of this debt?
If folks aren't familiar, the Department of Education announced just over a year ago this new program called Fresh Start, which gives every borrower who's in federal student loan default the opportunity to come out of default. They just need to contact their loan servicer or their collector and let them know they want this fresh start. If they go back to school, the process of going back to school will take them out of federal student loan default, and they will once again be eligible for federal student aid. Being in federal student loan default comes with a lot of negative consequences, and so at our institutions, which again, as you said, serve 9 out of 10 students enrolled in post-secondary education across this country, we really do everything in our power to try to help students avoid the awful consequences of student loan default. Thankfully, there are lots of options available to students, and we're here to try to help them every step of the way access all of the benefits that are available to them to stay out of student loan default.
We appreciate that. I know a lot of useful information there for people. Justin Drager, the National Association of Student Financial Aid Administrators, President and CEO. Thank you for your time this morning.
Thank you.